Good morning, and happy Friday, bag builders. Welcome to Secure the Bag with me, your host, Stephanie Pierre, aka Laker Girl, where Friday secures the bag. You now understand candlesticks, bullish versus bearish, and how earnings move the market. Today, we are learning one of the most, and when I say the most important skills in trading, knowing when to buy, knowing when to jump in the entry point and purchase stocks and or options. We're not at the options level yet, but the stocks, and when to wait and be very patient and disciplined. That comes down to three powerful ideals: support, resistance, and patience. Now, before we get into the show, I have to put in my mandatory um, uh, um, disclaimer. Uh, this is not financial advice. Everything is for education and entertainment purposes only. I am not a licensed financial advisor. Please trade at your own risk tolerance. And also remember, bag builders, the bag is your freedom fund. It is your peace of mind. It is your exit strategy, your future you protecting your present you. So remember, this is not financial advice, you guys. All right, let's jump into it. All right. So as I mentioned, these are the three most important things that you should know about, and when to think about these important terms and when to enter into the market and purchase stocks. Now, what you say? What is support? Support is a price level where a stock tends to stop falling and bounce back up. So think of support like the floor of a house. Okay. So think about it like it's the floor of your house. When the price drops to that floor, that's when buyers usually step in and hold it up. So remember the candlesticks. If you go back to the episode, the candlesticks, you'll see that wick, that long wick pushing that candlestick up. That means buyers are in there going and buying that stock. Now, why support happens? Support forms because buyers feel the price is cheap at that level. People who miss the move want to get in. Traders also see value there, and that's when the demand increases. So selling slows down and buying picks up. So here's a simple example. Let's say a stock keeps dropping to $40 and bouncing back up. $40 become that support level. So every time it hits $40, buyers step in and push it higher up, higher again. And that tells you buyers are defending this price. Okay. So how do we as traders use support? And you guys are bag builders. You look to buy near support. Set your stop losses just below support. Avoid panic selling at support. Okay, so you don't want to panic because you got that stop loss set. You also, support gives you a logical place to enter and a logical place to protect your bag. Yep, thank you for that slide. So buying near support, what it does is it equals lower risk, chasing at the top, and higher risk. So when you're chasing at the top, you're creating a higher risk. So support is where smart money shops. Okay. The next one is resistance. What is resistance? Resistance is a price level where a stock tends to stop rising and pull back down. Think of resistance like the ceiling of your room. Okay? It's the opposite. The ceiling of the room. When a price rises up to that ceiling, sellers usually step in and push it back down. Now, why does resistance happen? Resistance forms because traders who bought earlier want to now take their profits. And people think the price is getting too high. So they're going to wait. And then the supply begins to increase, and selling pressure shows up. So buying slows down and selling takes over. People step in and they start taking their profit. They start selling off. Here's a simple example. Let's say a stock keep rising to $50, but every time that it hits $50, it falls back to $45. That $50 becomes resistance. Okay? It tells you the price has trouble getting post to this point. And how do we as traders use resistance? You look to sell or you take your profits when resistance becomes near. Take your profits. Go ahead and take that profit, and then avoid buying right at resistance. I don't recommend buying at resistance. I don't buy at resistance. That's how I learned. I used to do that. Now I don't. I know when to buy at support and to sell at resistance. Watch for a breakout above resistance before you enter. Okay? So if it breaks out above that resistance, then you can go ahead and purchase. Resistance gives you a logical place to exit and also to lock in your profits. So buying near resistance, remember, equal higher risk. Selling near resistance is a smart strategy. And support is where you buy. Remember, support is your entry point. Resistance is when you get paid, is when you take that profit. All right. Okay. Now let's do a real life example. If a stock keeps bouncing around $40, okay, that $40 level is support. It is keeping it. If it keeps getting rejected at $50, that's the $50 level is a resistance. Okay. So remember that, you guys. This is important. This is when you say, I'm going to go ahead and buy. And I'm going to give you some real life examples what happened this week in the market. Now let's get into that third one. Patience. You got to stay patient, you guys. The real secret to trading is being patient and being disciplined. I can't say it enough. When it comes to the market, patience is just not a virtue. It is truly a strategy. And most people think trading is about speed. It really is actually about waiting. And I had to learn that because I got really emotional in the beginning of trading and had to jump in chasing and doing all those things. And I lost money because of that. But now that I am patient in trading means waiting for the right setup, not forcing your trades, and letting the price come to you. Following your plan, create a plan when you go in to purchase stocks and when you're trading. Saying no more than you say yes. Because good traders don't trade every day. I don't trade every day. I look at the market every day, but I don't trade every day. So what it looks like when you're being impatient is you're chasing the green candles. You're buying at resistance. You're trading out of boredom and you're over trading. So jumping in without a plan creates impatience, which impatient can become very expensive. So you want to stay patient. And when you stay patient, the best opportunities happen. It happens at the support levels. It happens when the pullbacks, when that stock pull back, when it's red, when there are clear trends, when you're looking at the charts and you see the clear trends of what is happening, if it's bullish, if it's bearish, you're seeing all of that. And after confirmations, those setups takes time to form. So if you rush, you enter at bad prices. But if you wait, you enter with confidence. Okay. So a stock you want at 50, say for example, you want a stock, it's at $52. Your plan says buy near $48 because that's probably where the support is. And impatient, if you jump in at $52, that means you're being impatient. So don't buy at that $50. Be patient, wait, and get in at the support level, which is $48. And that is the same stock but a different result. Okay. Remember that. Now, again, the market is always open every day, Monday through Friday, except for holidays. That's why I didn't do Monday show. But opportunities never run out. Your job isn't to catch every move. Your job is to catch the right move. And patience and discipline will protect your bag, okay? All right. Now, I'm going to keep it very simple with you guys. Trading isn't always about more. It's about waiting better. Most people lose money because they feel like they have to trade every day. You do not. But smart traders know, because patience is a position. Waiting for the right setup is not being lazy, it's being disciplined. You don't get paid for being busy, you get paid for being right. And patience helps you to be right. Because on this show, you guys know, Friday secures the bag and Monday builds the bag. Now, let's get into real quick. I want to get into some information. So, what happened this week with me and my stocks? Let me go into Robinhood, because I'm not gonna lie. Robinhood is my favorite platform to use, and then Webull, of course. I haven't used Thinkorswim, but I am thinking about getting on Thinkorswim eventually. But this week was really nice. It was a beautiful, and it was a shopping day on Wednesday. And I told you about the top 5 stocks. And Iran, and also IONQ. Oh my gosh. The money was made with those. They actually dropped, you guys. They dropped $5. That is so much money when you're doing stocks and or options. But $5, they broke down and were in the red. And of course, I did get in and bought some options. And just within minutes, I made over $120. Okay. I made over $120 profit. I still have these options in play because I bought them out at least a month. And I don't want you guys to even think about doing this yet, because you're not, you got to learn the fundamentals if you're a beginner. But Irene is right now at $52.68. It fell all the way down to $49. And then on Thursday, which was yesterday, it went back up to $55. And then, of course, it sold off and it's at $52, but it's still in the red. Now, IONQ, IONQ, you guys, did the same thing. IONQ is now at $47. Actually down right now. It's down $1.67. Guess what that is? You know what that means? Time to shop. These are the top 5 stocks, you guys. Under $50. Well, Irene is over $50 right now. But when it falls below $50, that's when you want to get in. That's those entry points. IONQ is at $47.70. SoFi is still at $26, you guys. I'm telling you, SoFi is long term. I bought it at $4. It's at $26. Okay, let's get into the real money yesterday. You can take that down. The real money yesterday, you guys, was Lemonade. You never heard of the stock Lemonade? Let me get into it for you. Lemonade is an insurance company, I believe, for pets, but let me just double check. I got to give you the history on this. What time at it? Okay, 15 minutes. Good. I'm doing great. Lemonade, you guys, is a holding company which engaged in the provision of insurance services. The firm products includes renters and homeowners insurance and pet insurance. It offered insurance coverage under the homeowners multi-peril, inland marine, and general liability lines of business. The company was founded by Daniel Asher Schreiber and Shay Winiger on June 17, 2015, and is headquartered in New York. The listed name, the ticker for it is LMND. It's called the Lemonade Inc. Now, you guys, I got to give you the history on this. I bought Lemonade back in let me get to my history on my purchase of Lemonade. Where are we here? All right. I bought Lemonade back in let's see, where's my history? Here we go. The first time I bought Lemonade was December 28, 2020. I bought 3 shares for $113.64. Okay. At that time, it was around that price. Right now, it's only $96. But just listen. I went back in and bought one more share because it dropped that same day for $111.75. So at that time, I had 4 shares and I spent over $400+. Actually, I went back in because the stock kept falling. Now, this is when I didn't really know anything. I mean, I knew, but I was buying stocks. So stocks is, I wasn't doing options. I was buying stocks. So that's fine. I went back in that same day because it fell down again to $106. And I'm trying to get my average cost down to be lower. So I bought 2 more at $106. Then I went back in the following year, November 18th. I bought 2 more shares. It fell all the way down to $55.87. Now, mind you, $113 is when I entered the beginning. Then it fell all the way down to $55.87. I went in and bought 3 more shares. Okay, May 10th, 2022, I went back in. Guess how far it fell? It fell all the way down to $18. I went back in and bought 3 more shares. I'm like, lemonade is a wrap. No one, I'm like, this company is losing. It's not, the outlook wasn't looking great. Good morning to you, Sherry. And now it's 2023. I go back in and it fell all the way down to $15.25. Now, mind you, I bought this stock in the beginning in 2020 for $113. It went all the way down to $15.25, guys. Now I'm like, oh my gosh, this is a wrap. Lemonade is not doing good. It's not going to come back to fall from $100 and something all the way down to $15. Guess what, y'all? Yesterday, lemonade took off. You know why? Let me get in my notes here. Lemonade went up yesterday. Where's my notes? It went up because of they are I believe Tesla. Let me go in. I have my notes here. I don't know why I can't find them. But I'll get it up right now. Bear with me, you guys. Bear with me. I usually have all my stuff up together, and for some reason, it's not showing. But lemonade did go up yesterday, you guys, because lemonade was basically someone is investing. Let me get into it. I don't know why my phone is not working. Like, okay, Friday secures. It should be right here. All right. Let me get in. This is my phone that I hate using because this one has an update on it. Lemonade. Okay, let me go in. Lemonade went up on the stock. And I knew I was going to talk about this today. Okay. All right, here we go. So lemonade went up of a bit because of Tesla and self-driving cars. A new Tesla was involved, but I wanted to make sure I give you the right information. So the news, remember the news moves stocks, okay? It moves stocks. So big news tied to Tesla and self-driving cars, plus strong analysts and trader activity, Lemonade announced a new insurance product specifically for Tesla drivers using full self-driving. So Lemonade is offering much lower insurance rates for miles driven using Tesla full self-driving. They launched autonomous vehicle insurance. Data shows full self-driving miles may be safer, lowering claim risk. And this is seen as first of its kind product because it's something that's not even out there. So investors see this as Lemonade getting ahead of a future of self-driving and insurance. The stock, you guys, it hit up to 13 to 17% in one day. It hit a new 52-week high. And I was excited because I've been in it since 2020, and I actually kind of have not been watching my lemonade stock. I said, well, eventually something is going to happen with it. And guess what? It did. It did. And I so excited because I owned 20 of the stocks at the time. And my average cost, you guys, was only $16. My average cost was only $16. And right now, Lemonade is up $97.90. You know what I did? I took profit. I sold half of it. I sold 10 stocks yesterday and I still hold 10. And right now, I sold close to I got so in other words, what I did was took back what I put in. I put in close to $900 into Lemonade through the years from 2020 to 2023. I took that money back out, and now I'm still sitting there with 10 stocks, sitting over close to $1,000. And I'm gonna let it go because guess what? It could go back up to $100 and plus, which I believe it is. It's at $98.11 right now. So I was excited about that yesterday. And so Lemonade, it just shows you to be patient and to wait for stocks to move. And when you see it, you purchase it and you see that it drops, you buy more. You buy more and your average cost goes down and down and down every time you buy more. And that is going to show you that eventually it took 5 years, okay, close to 6 years to get that profit, to get the money that I put in right back. But I got it back. So I was excited about that. And then, of course, my baby, who I love trading so much, is silver. Because silver and gold, you guys, is never going to go away. Silver and gold, if you're not, especially when Trump is talking about war and things like that, silver and gold will go up, go up. So anytime you see silver and gold, whether you buy it in paper stocks here or whether you buy the gold, actual physical gold and silver, either way, gold and silver is a great investment. Bottom line, silver right now is up. Let's see. And I still have my options in play. They don't expire, you guys, until February 20th. So I have plenty of time to sell them off. But guess what? Silver is up to $90.12. The last time we talked about silver, it was at 86 it was jumping between 83 and $86. So I am up on my two options. Okay. My two options. I am up 322%.28. So guess what? I bought two options at my average cost $395. So that times two is what I put in it. My profit right now is 322.28%, which means $22,546 is my profit right now. So I am not selling this because I know that silver is going to hit $100. And when it hit $100, I'm going to sell one of them. And then I'm going to let that other one rise and rise before February 20th get here. And I'm going to take the other profit. So bag builders, I'm just telling you, be patient. Know when to jump in. Look at the support. Watch the charts. Go back. Watch the videos I've done. Watch episode 1 through 5. We're on episode 6. It's teaching you the fundamentals. It's teaching you what to look at, where to get your resources, what to learn about companies. But I also gave you a nugget with the 5 top stocks. You already know where to go. And then ETFs. I talked about ETFs. If you don't, those are bundles. Those are baskets of all these top stocks. Do your homework. Learn about companies. It's very important that you learn about the company that you are purchasing stocks from. Eventually, you guys, we are moving closer to learning how options work, because options will give you fast money, but you have to know what the fundamentals are in starting off with regular stocks, and then you can move on to the options. Options can become very intricate, but they're fun. They're fun because you're making money, but you're, as an option trader, you're going to learn how to be long-term option traders, not short-term, because short-term will then become very risky for you if you don't understand and know how to use the options, because there's definitely a lot of terms and things that you have to learn about how options move. You have to learn the Greeks, the volume, the contracts, all of that. It's a lot involved, but we're going to definitely get into it. I know it's a lot of people say, I want to learn options. I want to learn options. Be patient. Be patient. Learn the fundamentals first. All right, you guys, that is it for me. I love doing this show every morning. It's a quick show. And I appreciate people tuning in and listening, even if you're not here right now, or if you're coming back to listen to the show. Thank you guys for supporting Secure the Bag. I'm telling you, in the long run, you're going to be very thankful that you did get in the stock market. Your savings account, again, you're not getting a lot of money when you're putting your money in the savings account. When you put it in the stock market, excuse me, when you put it in the stock market, you guys, your money is making money. It is not just sitting there. The bank is using you. Okay. I'll use the bank for certain things to pay bills, and that's it. I put a little money in there for savings, but other than that, my money is always making money at the end of the day. So timing matters, you guys. Structure matters. Patience secures the bag. Friday secures the bag. Monday builds the bag. And this is Secure the Bag with me, your host, Stephanie Beard, aka Laker Girl. See you guys back here on Monday. You guys have a great weekend. Stay safe out there, y'all.
I'm rich now. I got another big money. Thank you, Stephanie. All my stock is good now, baby.
You and just get in and go shopping when the market turn red. Get in.